Randy, great to have you back on the show. I'm going to put the same question to you that we just put to Mark Zandi, and that is the higher than expected JOLTS data that turned the market this morning. As we focus not only on the Fed tomorrow, but on another jobs report at the end of the week, what is the labor market signaling here, and what does it mean for the discussions that are already underway among Fed officials today?
Well, clearly the labor market is going to be a key focus of for the Fed and how they think about policy going forward. Because unless they see the labor market starting to weaken significantly, they're going to have to continue to push rates up. Because that's going to be the key thing that slows the economy down, that slows demand down, which is their the main tool that they have is trying to slow demand down. And if the labor market continues to be on a tear, that's going to be tough for them, and they're going to have to continue to move.
So this idea of a pivot, we've talked about this a lot with Steve Leisman, this idea of a pivot for which the definition seems to be changing and shifting. Do you expect to see any kind of quote-unquote pivot in terms of what Jerome Powell says tomorrow?
Well, I think it's clear, given their forecasts, and things are evolving broadly along the lines that they were expecting, except for the labor market probably being a bit stronger. They don't need to do 75 for the rest of this year and into the first quarter of next year. So my guess is he's going to signal that he's open to something a little bit lower, and that at some point, probably in the first half of next year, and maybe even the first quarter of next year, they're going to stop and they're going to assess what the impact is on the economy and on inflation. So my guess is you're going to hear a little bit of that, but he's not going to make any commitments to be 50 or 25 basis points. He's going to leave open that 75 would be on the table. But my guess is they're probably going to go to 50 and then maybe 25s the first quarter, and then hold there through much of 2023.
You're getting to something, Randy, that the market's wrestling with right now, and that is their hopes are obviously pinned on a softer pace of hikes, but maybe some realization that the terminal rate could end up being a little bit higher than we thought. I wonder what you're thinking about for next year. Maybe we put together a series of 25s and end up well above 5.
So I think it's really going to depend on how inflation and the economy evolve. I don't think they have like the terminal rate that they've set in stone. It's really going to depend on how things are moving. But I do think that it's quite likely that they'll end with a 5 handle. I mean, I think if you get another 50 basis points, 75. Tomorrow, 50 basis points at the end of the year, you're starting to get pretty close to 5, and it'd only take 1 or 2 more even small moves to get to 5. So I think they're going to get around there and then probably stop to assess, because I think by that time you're going to start to see the unemployment rate go up. Even though the labor market has continued to be quite strong, I do think that we're going to get the unemployment rate moving. I mean, the Fed in the current forecast say peak of 4.4. I think it's going to be at least over 5 and could even get to 6 by the middle of next year.